This is a lecture from Open Tuition. To benefit from the lecture, you should download the free lecture notes from opentuition.com.
VAT is one of the topics that will definitely come up in the exam. There will be between 5 and 10 marks for this topic. And it focuses around three main topics. So we've got the registration and deregistration, the special schemes, and how to work out the VAT. So those are the three main areas that come up. You might get a question on penalties as well, but those are the three main areas that might come up. So you're definitely going to get something in the multiple choice section because there are a lot of little rules here that could be tested. And then it might come up as a second part of maybe a section C question after a limited company. So you might have to do something in the A part for a limited company, and then in the B part you'd have to do something for VAT. So it is a topic that you need to be fully aware of. It may be something that none of you have ever dealt with before. It is a different kind of tax. So let's look at the first main topic, which is VAT registration. Now, to deal with VAT registration, there are two methods. You either look at the past, which is what's known as the historic turnover, or you look at the future. And if you get to, it says down here, £85,000 of taxable supplies, then you have to register. So you have to use one of these two tests in order to work out at what point you become registered, because you'll need to notify HMRC at the time, and then from what date you need to start recording the VAT. So historically, a trader can make supplies of various different types. There's a standard supply, which is taxed at 20%. There are some services and goods that are zero rated and some that are exempt. Taxable supplies are only the top two. So these are just taxable. These are obviously not. You can then register for VAT, and you register for output VAT on sales, but that enables you to reclaim the input VAT on any purchases and expenses, both capital and revenue in nature. If you're only doing exempt, which is this one, then you can't register for VAT, you can't charge VAT, and you can't reclaim your input VAT. So you have to register historically if during the previous 12 months the value of the tax supplies exceeds the limit of 85,000. And then if it's below 83, then you don't have to register. If you are over that limit, you must notify within 30 days, and it's days, not months, because all of the months have different numbers of days in them, after the end of the period when the taxable supplies exceed the limit of 85,000. So it's 30 days after the period, and it's normally after the end of the month. Well, I'll show you how that works in a moment. Then you will be registered from the first day of the second month after the limit is exceeded. Okay, so that rule could come up in a question like this. This is a typical kind of question that you might get on the historic registration. And what they're doing here is giving you month by month sales figures. And you calculate the registration over a 12-month period, as it said. So if we start 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12. So at that period, at the end of May, the total, I've worked it out before, is 64,400. Okay, the limit has not been exceeded. So what you now need to do is to roll that 12-month period forward. Let me change the pen so you can see the colour. So we ignore that first one, but we add on this one. So that becomes 1, 2, 3. I'm doing it very basically here, just so that you understand the concept of how this works. So we've rolled it forward. We've taken off the last one and basically added on the new one. So if we take off 3,900 and add on 11,800, the total is now 72,300. We're still not over the limit. So let's change the colour of the pen so you can see exactly what's going for a nice blue one. And what we're going to do now is to roll it forward. It's called a rolling 12-month period. I'm going to knock that one off. And I'm going to add that one on. I've rolled it forward. It's still a 12-month period, but I have rolled it forward. And that total comes to 86,000. So when will Orchid be liable to compulsorily register? Okay, that will be at the end of July. Okay. The date by which they must notify revenue is 30 days later. So that's the 30th of August. What year is that? 2024. And when will they be registered from? The beginning of the next month. So you can see how that works. So it's a rolling 12 months. Always start at the top, do 12 like I did. That doesn't work. Take one off, add one on. Take one off, add one on until you get to that limit. Now, what about a future registration? This is important because what this does is if you're trolling along, you're doing whatever you need to do, your turnover is fairly regular, and all of a sudden you've got a very large contract coming up. The VAT people want the VAT on that contract. So it says there, a trader must register for VAT if the taxable supplies exceed 85,000 during the next 30 days. And that will then capture that large contract that you've made. Because if you add that contract to what you've done before, the 11 months, then you are obviously going to need to be registered for VAT. So this is regardless of any taxable supplies preceding these 30 days, and again the figure is exclusive of VAT. You must notify by the end of the 30-day period and be registered from the beginning of the 30-day period. They don't want you to register after, they want you to register for. Why? Because then they can have the VAT on it. Okay, so we have here example number 2. Tulip commenced trading on the 1st of April 24. Its forecast income is 90,000 per month. The company sales are all standard rated. State the date that Tulip must notify HMRC by and the date from which the company will be registered. And again, you can see this as a multiple choice question in section A. So if the company has reasonable grounds to believe they're going to exceed that limit in the following 30 days, then they need to be registered. Now, obviously, their forecast income is over the limit. So taxable supplies for the 30 days to the 30th of April 24, they are going to exceed that limit. So they must notify by that date, because that's the end, and they will be registered from the beginning of that period of time, so that the revenue can capture the VAT on that first month. Now, you can voluntarily register for VAT. There might be some reasons why. Beneficial. So if they are making zero rated supplies, they can register for VAT. They don't need to account for output VAT, but they can then reclaim the input VAT, which will give them a refund every month or every quarter or once a year. Okay. If you're making supplies to registered customers, input VAT can be reclaimed. Charge output VAT on top of the pre-registration selling prices, and then that will be recoverable by customers. So it mentions here that it's not beneficial to voluntarily register where your customers are members of the public, as they cannot recover the output VAT, which means the selling prices will increase obviously by 20%, and the output VAT will be an additional cost that the company has to bear. And also, if you can't pass it on, that's going to could cause problems. But if you are voluntarily registered for VAT, there's a lot of paperwork, there's a lot of admin, and you have to fulfill all the requirements for your invoices, your paperwork. And the VAT people, and people who administer this, they have great powers of entry, and you do have to fulfill all the requirements, because basically it's a tax that the individuals are collecting on behalf of the revenue. So let's have a look at an example here. We have Vine Limited that's been in business for a number of years. All of its sales are standard rated and are to the general public. Now, they are not currently registered for VAT, and their annual income is 80, which is obviously below the limit. Now, they are planning to increase prices, and this will mean that the annual income has gone up to 87,000. And there is no further scope for any price increases, and their standard expenses are 4,800. Determine if it is beneficial for Vine to put up its prices. Okay, I'm going to show you the model answer and see what sort of things that we need to be including in that answer. So here we have the model answer. So prior to putting up its prices, it's net profit. So what they've done is worked out that's the income and that's the outgoing. So that's our profit figure. You'd be able to work that out from the question. If Vine put up its prices, then it will exceed the VAT limit. Now that's stating the obvious. I want you to do that in the exam. State the obvious. And it will have to register for VAT. So you might not think about that one, but you could do that, and that's going to get you marks because you've stated the obvious, that this is what we're dealing with. Output VAT will have to be absorbed as it sales to the general public, and no further scope of price increases. That's from the question. Okay, and again, you could get half a mark for stating the obvious, that you have considered all the aspects of this client's situation. It's going to exceed the limit. It will have to register for VAT, but they're going to have to absorb that because the public can't reclaim it, and they can't do any more price increases. Those obvious statements are going to get you marks. So please, don't think it needs to be complicated. Sometimes it's very, very simple. Now, the revised annual profit, therefore, is 87,000, okay, net of VAT. And the expenses are 4,800 and then 4,000 net of VAT. So our net profit has actually gone down. So this is a decrease in the profit, so it's not beneficial to put up the prices. You had to determine whether it was or it wasn't, and it's all to do with profit. So let's go back to the notes and look at the VAT deregistration. So a trader stops being liable to VAT registration when it ceases to make taxable supplies, and they must notify the revenue within 30 days, and they will then be deregistered from the date of cessation or an agreed later date. A trader can also request VAT deregistration if the taxable supplies is for the next 12 months, are going to be less than 83,000. So let's have a look at an illustration how that works. Iris Limited has been registered for VAT since 1990. All the sales are standard rated. The company has recently seen a downturn in business activities, and sales for the year ended 30th of June 24 and 5 are forecast to be 60,000 and 49,500 respectively. Things are going down. Iris Limited can request that HMRC cancel its VAT registration because its taxable supplies during the following 12 months will not exceed 83,000. This is provided the fall in the value of supplies is not due to a temporary or a permanent cessation, and the VAT registration will be cancelled from the date that the request is made or an agreed later date. So if you get one of these, just explain the rules like it does there. So that might be the question, and you may then get, it could be a multiple choice question, and then you'll get 1, 2, 3 and maybe a fourth one, and you have to choose which one of those is applicable in the situation that you find yourself in. We're still on deregistration. So there is a deemed supply of business assets such as plant, machinery, equipment or trading inventory when a trader ceases to be registered for VAT unless VAT is due on the assets is more than £1,000. So if you are ceasing to trade and there is this deemed supply of business assets, unless it's below that limit, in which case you would then have to work out the output VAT on that deemed supply. If a business disposes of its assets and trade as a going concern, now that might be on incorporation, or it might be when they sell the business as a sole trader, if that's the situation. Now, if it's a going concern, and that's the term you're looking for, no output VAT, because it's what known as outside the scope. It's not exempt, it's outside the scope of VAT. Conditions for that treatment, these are the conditions that must be fulfilled in order to be able to obtain that outside the scope piece of legislation. It must be a going concern. There must be no significant break in the trading. It must be the same type of trade, and they must be registered for VAT too. And we have here an illustration which just shows how that works. So Daisy is a self-employed builder registered for VAT. The business has been quite successful and she's decided to incorporate her trade into a new limited company on the 30th of April. All of the business assets transferred to a new company in return for shares. Now, those are the rules for incorporation. You don't need to know those at this stage. It's an ATAX topic for sure, but those are the words that you are looking for. So, no output will be charged. That's an obvious statement. Since the business is transferred as a going concern, use the terminology in the question if you have to write that out. The company must or will be registered for VAT that she's transferring it to, and they will be able to take over her VAT registration number should they want to do so.